Hello and welcome to Economy and Markets TV, where we have conversations with a purpose. I'm your host, Dave Okenquist, the Senior Research Analyst here at Dent. Joining me to take you around the world of economic and financial news and covering each topic in 2 minutes or less is the editor of Boom and Bust, Mr. Rodney Johnson. Rodney, good morning.
Morning, Dave. How are you?
I'm doing very well, Rodney. I hope you had a great holiday with the family and back here on this last Friday of the year.
Yeah.
And a little bit of a quiet time. There's not much in the news of economic and financial news, but there were a couple of releases, and maybe the best thing is that there's some sense of calmness at the end of the year, Rodney.
I'll take it.
Yeah, I mean we have the markets up hitting all-time highs.
Mm-hmm.
No one's yelling at each other this week. We haven't heard. I'm going to mention the I word, impeachment, only to say that we haven't heard it. So I think we're ending the year at least so far, unless something completely falls apart today or the next couple of days at the beginning next week. It seems like we're having a nice end to the year. What do you think?
I think that's what's going to happen, right? It's kind of on autopilot, has been for 7-8 days. Anybody who is, high up in a trading organization has long since closed the books on this year. They've banked their profit. They've hedged their position. They're spending time with family, doing what you'd want to do after earning, near 30% up to a week or so ago, and now possibly crossing 30% on the S&P 500 and the NASDAQ well above it. So, yeah, locked for the rest of the year, as you say, barring something horrible happening Monday, Tuesday, which seems really unlikely.
Yeah, and as you mentioned, Rodney, holiday spending is up nearly 3.5% above last year. And as we had a little bit of a stock market wobble last year, or really the tail end of it, which began in October, just a brutal decline. And the other thing you mentioned is Kim Jong-un didn't end the world yet.
I know, there was no gift, there was no surprise. And that's all good for us. On holiday spending, you and I have talked about it for really since Thanksgiving. I've been expecting it to come in strong. I'm still in the 4 to 5% range where I started all this. I think we're going to see a boost in that. You're seeing consumers, as we've talked about, they've got jobs, they got a little cash, they want to spend it, and they're making it happen. And it's a good thing they are, because business spending just still isn't there. And that's going to be the theme as we get past January. You get some decent earnings as companies say, hey, the fourth quarter looked okay, maybe 2% growth. I haven't looked at the Atlanta GDP number in a while, the forecast, but I'm guessing it's right at 2. But people are going to be looking at the first quarter and going, but businesses aren't spending. And that's going to be the story as we see profits grow maybe mid-single digits in 2020 after flat to down in 2019. And then you start talking about, maybe not a profits recession, but certainly a dry spell.
Yeah, I mean, let's get into that actually, because something you mentioned about business spending. One of the releases we did get this week was durable goods, down 2% in November off of a 1% growth of expectation. GM workers came back, but didn't really produce as much, didn't fill as many orders as expected there, not quite getting the pop. I believe they were expecting about 3% growth and just fell short. Aircrafts also fell. Of course, we have the Boeing situation ongoing. So yeah, what do we make of this? You expect this divergence between the consumer and business to continue and heading into the beginning of the year?
I do, because what we're seeing is businesses are fulfilling, right? If they weren't fulfilling, if they had customer demand left on the table, they would be investing in infrastructure and doing all the things to build out new supply chains to get product to market. And that's not happening.
Yeah.
We're becoming more productive, right? I know our productivity numbers are lower. What I mean is companies are doing what they can to keep delivering the same number of products, but cost less, right? You're going to automate. You're going to do whatever you can to increase your profit margin, but that doesn't mean putting new widgets on the shelf. We got enough widgets on the shelf to go out the door. And so that's the divergence we've been watching here for really most of this year, and I think it'll continue into 2020.
Another report we got this week, Rodney, was in housing. New home sales were up 1.3%, although that number also missed expectations, rather. And the number behind it, the month behind it, rather, October, was revised lower. So the monthly numbers, as you point out today in the report, Rodney, the monthly numbers are sort of wobbly, not so hot, but compared to last year, up 20% when things were looking not so good for the housing market. What changed over the last year?
Well, we know what changed, right? The Fed changed, the market changed, the interest rate yield curve changed. And so a year ago, we were dealing with the final increase in rates by the Federal Reserve. I mean, remember, they raised rates December of last year, and we saw the Treasury markets a point or so higher. Mortgage rates were a point higher. And so in the intervening months, we've seen the Fed cut 3 times. We, of course, seen mortgage rates come down. I want to say the 30-year traditional mortgage is at about 3.8%. And yet unemployment continues to go down, meaning more people have jobs, and yet mortgages cost less.
Yeah.
And so it drives housing demand. There's never been a question of people wanting to buy houses. There's been a question of affordability, and it continues to be the thing. One of our readers, I believe his name is Neil, I saw a comment come by that said, look, we want the houses out there in the Phoenix area. The problem is they've gone up dramatically in price over the last several years, and our wages, while going up, he didn't mention this part, but wages are not going up as fast as home prices. And so affordability remains the key. Good news is they are selling more new homes. Builders are actually more confident than they've been in a long time. And so hopefully they'll bring more inventory to the market, because that's what we need. We need more units available for sale.
Yeah. So, Rodney, did the Fed stave off housing decline? It's something more substantial that people were a little bit worried. I mean, it's market manipulation, but lowering rates and doing all that. Did it sort of prolong maybe something that could have happened?
I don't think so. I think that it's a little icing on a cake that the Fed lowered rates and your mortgage is now 3.8 instead of 4.8. But still, come on, it's under 5. I think what kind of has led this resurgence in the housing market, some this year, has been the equity markets and very low unemployment. It's all about what you can afford. And so if people are working more and they're saying, hey, I can do this, I feel more comfortable in my job and the future of my job, then perhaps they're going to reach for that house. And I think that's what's driving it.
Excellent. Rodney, something that came up, not a news item per se, but just some news that I came across this morning in the Wall Street Journal is on wages. I just wanted to get your take on this. Wages are rising on the lower end of the spectrum. There was a chart on here that said the lowest 25% of earners are up 4.5% for the year, whereas the highest 25% are up just 3% for the year. Also, when it breaks it down by high, low, and medium skills, those are all converging at about 3.5%. So it seems like that's certainly good news, seeing wages on the lower end tick up a bit, don't you think?
It is. Part of that is just paying for people. I mean, that's kind of where the rubber meets the road in terms of getting people, because everybody walks up the employment ladder. And so when you're running out of people to employ, very low unemployment, then it's where you're getting that entry-level service job and you just can't find somebody with a pulse to do the job. Yeah. And so you're going to have to pay a bit more. And so unemployment is driving it, and we can't forget about the minimum wage laws that have gone into effect around the country that are driving these dollars as well. You got to take that with a grain of salt, because you're seeing the people who have a job. And so there's the other side of this is, as wages rise to a certain level, companies just do with fewer workers. And so, there's the two sides of that. In times of low unemployment, it's not a problem, right? People who want a job can find a job, and the people who are finding jobs are getting, that higher pay. But when the market moves the other, or rather the economy moves the other direction, which it will at some point, then those high minimum wage numbers act as a deterrent to employment, and it becomes a problem. So it's good for today. We're going to see more of that in January of next year. Just next week, we're going to see some more of those minimum wage laws come into effect and raise numbers. So we should see that low end get another boost.
Absolutely. Ronnie, there's a story you found of a man from Gulf Breeze, Florida. It was a nice story at the end of the year. Talk a little bit about that.
Yeah, Gulf Breeze is a town that I know well. My father lived there for a while when I was a kid, and I traveled through there just in April, going on vacation to Pensacola and the Panhandle. Gulf Breeze is on that peninsula right there before the beach island. And a gentleman who had been struggling 30 years ago, had a couple of, actually I want to say 3 daughters at home, in his mid-30s in 1983 for Christmas. And he went without power, went without heat, because he couldn't pay the bills. Here he is in his 70s in 2019, and he decided to give back. So he went to the local power authority in Gulf Breeze, Florida, asked for all the accounts that are past due for electric bills. There were 36 of them. It's not a big town, but he paid them $4,600 because he said nobody should do without. You got to feel good about that.
Yeah, absolutely. Great story to read at the end of the year. Certainly this time of year when all of it, well, Florida, you're not going to be super cold, although in the Panhandle, it can get a little bit,
well, it can get cold and hot. So you want that electricity no matter what's going on.
Yeah, absolutely. What a great move by him to sort of pay back.
Yeah.
That's all we had for this week and this year. Looking ahead to next week, we're going to get a release on the U.S. Home Price Index. And we typically get employment on the first Friday of the month, but with the holiday, they're going to push that to January 10th.
Yep.
So we may be, the cupboard might be a little bare next week in terms of economic releases, but that's okay. We get a little bit of a break and maybe talk about maybe something extra like that nice story from that man from Florida, or just that little bit of wages. That story there, that development. Rodney, anything to wrap up this week in 2019?
No, it's a quiet week, right? Next week's going to be crickets. This is the last broadcast of the year, of course.
Yeah.
As I look at just year end, I think that the market will continue to dribble up because that's kind of the trend we've got right now. I think we'll surpass 1997 in terms of the run, which would be great. The only thing you look out and say, hey, the potential cloud here to the silver lining would be the repo market. And it's that internal financing that goes on with banks and lenders and borrowers who borrow overnight. The end of the year is a big time for the repo market because banks want their books to look a certain way for year end because it determines their regulatory requirements for the next year. And they want to look as good as they can so they have the lowest requirements. And so a lot of people are going to be asking for extra cash to pad their books. Could cause some consternation in the repo market, but I fully expect the Fed to show up with basically wheelbarrows full of cash if anybody needs it. It might make a story, but it won't make a difference.
Thank you so much, Rodney, for giving your insight. It's always a pleasure to talk to you. If you at home have a question for Rodney, send that to tv@economyandmarkets.com. For Rodney Johnson, I'm Dave Okenquist, and this has been Economy and Markets TV.